I'm going to show you how to turn the money you already spend on bills, groceries, gas, rent, and everything in between into tax-free income that grows for you, protects your family, and build generational wealth. I'm Elridge with Vertical Capital, and I've used this exact same system to help families, entrepreneurs take control of their cash flow and build real financial independence. By the end of this video, you'll know exactly how to make your money grow even when you're spending it, without stocks, without real estate, and without risk. I'll break down how this strategy actually works. I'll show you the math behind it step by step. Then I'll show you how to apply it in your own life so you can start multiplying your money immediately. Most people work their entire lives for money, but never make their money work for them. Here's what happens. You make money, you pay taxes, you pay bills, and whatever left, you might try to save it or invest. But here's the reality. Your money is being taxed multiple times. When you earn it, when you spend it, and even when you try to grow it in a 401k or IRA. Those retirement accounts sound great, but they come with strings attached. Penalties if you withdraw it early, taxes when you take it out later, and zero control over what happens in the market. If the market crashes 30% like it did in 2020 or in 2008, you lose, not the government, not the broker, you. So what if there was a way to grow your money without the risk? What if you can earn interest on every dollar you make, even the ones you spend? That's what the banking system does. A banking system is built around a financial tool called an Index Universal Life Insurance Policy, or an IUL. Now, before you jump off this video, this isn't the kind of insurance that just pay you when you die. This is the kind that pay you while you're alive. It's structured like a personal family bank. You put money in it and it earns interest, and you can borrow from it at any time, all while your cash keeps compounding inside the policy. The key is that it leverages three sections of the IRS tax code: 7702, 101A, and 72E. Together, they allow your money to grow tax deferred, be accessed tax free, and transfer to your family tax free when you pass. That means you can grow, use, and pass down your wealth without ever handing a piece of it to Uncle Sam. Now let's look at how this works simplified. Let's say you make $10,000 a month. After taxes and bills, maybe you got $2,000 left. Most people take that leftover money and put it in a savings account earning 0.1% interest, or a 401k account that they can't touch for decades. But here's what they don't realize. Their real wealth isn't in the $2,000 they save. It's in the $8,000 they spend every single month, because that $8,000 is leaving your pocket forever, and once you spent it, it's gone. But what if you could make that $8,000 work for you while you're spending it? Here's how. When you contribute to an IUL, part of your money goes into the cash value account, and part of it goes towards insurance costs. That cash value grows tax-free, tied to the performance of an S&P 500 and index. When the market goes up, your money goes up, usually capped around 10% per year. When the market goes down, your money doesn't lose value. It just locks in, sitting safely at a 0% floor. So while everyone else is panicking during the crash, your account is untouched. You never lose money, and when the market rebounds, your gains start from the new higher balance. That's how the rich keep winning. They don't play the game of losses. Let's put this into perspective. Say you're saving $1,000 a month in your IUL policy. That's $12,000 a year. Over 25 years, that's $300,000 in total contributions. Now, if your average annual growth rate is just 7%, your policy could grow to over $760,000 tax-free. You could borrow against it at any time for a home, business, car, college tuition, and still earn interest on a full $760,000. So even while you're using your money, it continues to grow as if you never touched it. And here's how. Let's say you borrow from your policy at 4%, it earning 7%. You keep in the arbitrage of 3%, the spread. Profit on the money you're using, that's like getting paid to use your own money. Now compare that to your bank account. You withdraw your cash, your balance goes down, and you stop earning interest. With this, your balance stays intact, compounds every year, and you can use it whenever you need it. That's not traditional banking, that's smart banking. The IUL doesn't just grow your money, it protects it. Here's what you get. Principal protection. Your cash value never goes down, even if the market crashes. Tax advantages. All growth, access, and transfers are tax-free under IRS code. Living benefits. If you get sick, injured, or disabled, your policy can pay you directly. Creditor protection. In many states, your policy is protected from lawsuits and creditors. Legacy security. Your family receives a tax-free death benefit instantly when you pass. So this isn't just about wealth creation. It's about financial peace of mind. It's having a system that protects you while you're living and protects your family when you're gone. Now let's talk about the part that surprised most people. How to earn money on the money you spend. Let's say your monthly expenses, rent, groceries, gas, insurance, and everything else total $8,000. If you could earn even 3% interest on that spending through this system, that's an extra $240 per month. Over a year, that's nearly $3,000. Over 20 years, that's $60,000 from the money you were already spending anyway. Now imagine doing that consistently while your IUL continues to compound on the back end. The goal isn't to save every dollar, it's to make every dollar do a job. That's what separates people who live paycheck to paycheck from people who live financially free. Once your policy is in place, it becomes the foundation for your family bank. And here's how it works. You pay premiums into your IUL, that's your deposit. Your cash value grows, that's your interest. You borrow from your policy, that's your loan. You repay yourself on your own schedule, no penalties, no restrictions. Now, every major purchase, car, home, business, or education can run through your own system instead of someone else's. And the whole time, your money keeps compounding. Over a lifetime, this could mean millions of dollars circulating through your personal banking system without ever losing control of your capital. That's how you start generational wealth, not just by saving money. And you might be wondering, why doesn't everyone do this? And it's simple. Most people don't know it exists. The banks in Wall Street don't teach it because they rather keep using your money for their profits. The difference between them and you is that they earn interest on every dollar that moves through their system. And now you can too. This isn't about chasing returns or timing the market. It's about controlling where your money sits, how it grows, and how it serves you for the rest of your life. If this message resonates with you any, and if you're ready to stop letting your money slip away and start making it multiply, I want to personally invite you to join our free finance community. The link is in the description. Inside, you'll learn how to structure your own family banking system, design an IUL the right way for your goals, and start turning your everyday expenses into long-term tax-free income. You'll get access to lessons, strategy calls, and a group of people who are applying the system to pay off debt, build liquidity, and create lasting financial independence. It's 100% free. It's where I teach the same methods I use to help families, business owners take full control of their cash flow. Click the link in the description, join today, and start building your own financial foundation. Most people spend their whole lives working for money, but the wealthy make money work for them. Now you know how. I'm Elridge with Vertical Capital, and this is how you turn your everyday expenses into tax-free income. I'll see you inside the community.